Hello, and welcome to this month's episode of Root and Branch, where we discuss all things sustainable and ESG. Hi, Nina, how are you?
I'm very well, Chris. How are you?
I'm okay. It's a bit chilly and grey today, but I'm sure spring will eventually show its head. But
One
yeah, at the
day.
moment, yeah, let's hope so. So let's dive straight in because this is meant to be relatively quick. And I just wanted to quickly talk about how the LMA has issued their new social loan principles recently. In fact, I think it was last week, which is good. They're sort of slowly moving through all the different things to build out their loan sustainability suite. And interestingly, we issued a second party opinion a couple of weeks ago on Yorkshire Building Society's social bond framework. So there's a whole load of kind of stuff going on in the social area. So I guess people kind of did green first and now they're moving into social, which is really interesting. But what are you seeing in the loan and bond market?
So in leveraged loan and high yield bond world, we've actually seen a bit of a pickup in issuance over the last month or so. I guess last time we talked, we'd only been sort of 2 issuers in the high yield bond sector. We've now
Yes.
seen 5. There's actually 2 this week alone. We've got Rexall, which is out with a 300 million sustainability linked bond. We heard the book on that was over 2 billion, and pricing has been tightened and it's gone very
Wow.
well. I mean, high yield bonds are sort of been pretty strong or for the most part so far this year. So I guess it's not too surprising, but it's good to see that go well.
Mainly
Also,
structured with penalties, not benefits as well.
yes, so it's a coupon step up and it's linked to greenhouse gas emissions.
Okay.
And then also this week we have out the Lonza specialty ingredients, which is being bought out by Bain & Simbin, and that's got a loan and a bond. And on both portions of that, there is ESG language. So on the loan side, I guess that's quite normal that we've seen, quite a few buyouts so far this year, Stark and Flender and things which have got ESG language on. But we think this is the first buyout bond, which is sustainability linked.
So stick on the bond, Karen, stick on the loan?
Absolutely. Yeah. I mean, bonds are less used for buyouts typically than loans anyway. So I guess it's not so surprising that it's fallen a little bit behind. But it's nice to see, and it's feeling a little bit more that they're becoming not quite standard across the market, but certainly more frequent and certainly more typical.
Actually, I would take that theme and run with it and say, I think, I would confidently predict in 6, if not 12 months, it will be standard. So I was chatting with a PE firm the other day. They're increasingly putting it more and more into everything they do. But also what I've noticed is when PE firms are doing amendments, pricing changes, so not a new deal, not buyout, not refinancing, they're doing amendments, they're doing an add-on or something, and also layering in an ESG margin ratchet. So people are just rolling it out across their entire portfolios.
So you've seen that on a few things so far. So on the loan side, you've seen Arcel, you've seen Seralia doing little add-ons and repricings of the existing, and they put some ESG language in there at the same time. Similarly, UPC went out with new facilities that replaced existing facilities, had the same maturity, added some ESG language in. It's getting to the point that almost every sponsor has done it now. So it's comfortable. So they'll be looking at how they can roll that out over the portfolio. I guess the best analogy that I've been using is sort of looking at how Cov-Lite, maybe a few years ago we were very excited by this new innovative Cov-Lite structure. Yeah. And now that's just pretty much standard. So I wonder if that's where we're going to get in a couple of years.
That's an absolutely perfect analogy, and I've often said to you, I think PE firms genuinely believe ESG means good performance of their companies, but also now, they're happy with getting some kind of margin ratchet. And I'm also beginning to see people doing 3 KPIs, not just one. And it might, kind of ES and G, but I think that's a trend. And I also think there's a really strong trend to some kind of third-party monitoring of those KPIs, not just, hey, we're going to do this and let's make a KPI out of it. We've already talked about in-the-money KPIs, and I think it's really, really changing.
Yeah, investors want something that's meaningful. They don't want something that a company is doing already or has done already, which basically just means 6 months in you can get a price tightening. That's not what people are interested in. I don't feel like we have enough data yet to really definitively say, this is the trend where we're going from 1 to 3 KPIs. We're working on the data. We're hoping to put something together. We're hoping to get something published from an LCD point of view at some point.
Cool.
But yeah, it certainly seems that it's developing. The conversation with investors is developing. The complexity of the discussion is developing, and sort of how people are seeing it is becoming increasingly sophisticated, I think.
Yeah, actually, it's really interesting you say about what investors think, because obviously my job is to talk to private equity and banks and CLO managers, but I'm getting kind of random investors coming in asking me to talk to them about what our ESG product suite is, and so is my investor group that works with us. So that's something that's quite new. Investors actively saying, what are you doing? What's going on? Tell me about what's going on in the space. And I think that's really interesting.
Absolutely.
Cool.
It's been quite a quick development, really, I guess, over the last year. So it is a steep learning curve for everybody, and everybody wants to get involved and find out what's going on.
Yes. Cool. All right, then. Thank you very much, Nina.
Thanks, Chris.
If any of you out there have any questions or want to talk to me on Nina, or actually want us to discuss anything in our next monthly video, please feel free to contact Nina or me. Thank you.